Welcome to the T Rowe Podcast, your ultimate destination for mastering the world of real estate and mortgage with an unwavering and huge emphasis on maintaining the right mindset. You know, in this ever-evolving landscape of real estate and mortgage, success absolutely requires more than just industry knowledge. It absolutely demands resilient and positive mindset. I'm anxious to share with you my experiences, storytelling, special guests. Let's get started. Focused on thinking, retaining, obtaining, and winning every single day. That's what T Rowe stands for. Hold on tight. Here we go. All right. Welcome back to the T Rowe Podcast. Think, retain, obtain, win every day. That's what we're all about. And I am really excited today, everybody, because I have a very special guest in the studio. Kind of planned, kind of not planned. But I would like to welcome to the studio Mr. Ken Phillips.
Appreciate it, brother. Glad to be here. Watched the podcast several times.
Thanks so much for coming in. Now, we're kind of redoing a little bit of this because I messed up and didn't push the right button earlier, in all disclosure. But you come to us from a distance, Ken. You are you from California? No, you're not from California, but you went from California to where?
So we left California, retired law enforcement officer out of California, Paradise Police Department, Butte County Sheriff's Department. Started a mortgage company, ran that till 2008 when everybody knows what the market did here in California. We moved to Tennessee, and we were there for 9 years. My three youngest kids graduated from high school there.
I cannot believe it has been that. And that was just Tennessee for 9 years.
That was Tennessee for 9 years. We went there in 2008. Oldest son, Ben, who you know very well, that played for the Junior Trojans and Oak Ridge Trojans football program, had got a scholarship to play football at Carson-Newman University there. So I had family there, so we moved there. Then we ended up 6 years ago, I had the opportunity to go back home, back to my hometown in Hernando Beach, Florida. And so we've been there ever since.
Yeah, that's fantastic. Yeah. So, and yes, you mentioned the Junior Trojans, and I have some straggling pieces hanging out in the studio here. And I guess it's important to note that that's really where you and I, did we first meet in the Junior Trojans?
First met in the Junior Trojans program as coaches, yeah.
Yeah. And boy, those are the days. I'll tell you, Lisa and I and other friends, we revisit those days, you know.
I do all the time.
I mean, on one respect, you think, oh my gosh, some of those days were rough and dealing with some of the parents. But on the other hand, it was like what we did. It's where we were every single night on the fields. It's where we were all day on Saturdays.
All day on Saturday.
All day.
Then you and I both served on the board as well.
Yeah, well, you were El Presidente.
Yeah. I was there all day Saturday.
That's right. Yeah. And I spent my time there as well, and then was VP of football, and then, of course, coached some football teams.
I'd do it all over again in a heartbeat.
I would, too. Absolutely.
Some of the best times of my life.
Yeah, no question about it. Just amazing time. And then you and I connected from a professional standpoint.
Correct.
You had
a mortgage company.
And were we a broker shop then?
Yeah.
Yeah, we were, right?
Fidelity Capital Financing.
Yeah, that's right. And those were some good times, and learned a lot. And then, of course, that led us right up to the wonderful time that you mentioned earlier of 08, 09, yes. You know, where the bottom fell out, you know. Yeah.
We were actually back in Tennessee with my oldest son, Ben. We'd taken him back to school. He was starting his freshman year there at Carson-Newman, and I got a call from you, actually, telling me that American Brokers Conduit had went under.
Yeah.
And
right.
You were a practical joker, and I thought you were playing a practical joke on me. And I called our trusty loan rep, Jeff Mender.
Oh, I remember Jeff.
And Jeff wouldn't answer the phone. And that started the whole downfall.
Yeah. Kind of funny but not so funny story is I had a loan in funding, and I couldn't get a hold of anybody.
Yeah.
And so I drove down to the building. Remember, they were in Folsom.
Yes.
Down in Folsom by the outlets there. And as I pulled up in the parking lot, there were people putting chains through the door handles.
You actually called me and told me that too.
I'm like, hey.
I was getting a play-by-play on the meltdown of the...
Yeah, and we remember those days where you could log into implodometer.com every morning and see who went away.
Yeah.
You know, I know maybe this isn't so much on topic, but I think it's important for anyone listening to understand how far the lending industry's come from that time to today. In fact, there's a lot of folks, both in the real estate and mortgage industry, and I believe in large part because of our media, and I say that biting my cheek here because I'm not a big fan of how the media promotes things. They're making news, not reporting it.
Correct.
And right now, unfortunately, for potential home buyers or homeowners that might want to refinance or move up or move down or move lateral or relocate, whatever the case is, I don't think the media is doing us any favors, and they're actually referencing what the industry is going through now to '08. And it's nothing.
Not even close.
Not even close.
That doesn't even resemble anything that happened in '08.
Yeah, and so let's talk about that for a second. So leading up to '08, all through the mid-2000s, we remember the subprime loan days.
Oh, yeah.
Right? The interest only, the stated income, stated assets, no income. Heck, you had no income, no asset loans, and you could do it at 100%, no down payment money. In fact,
remember Bank of America had a 107% program where you could borrow 100% of the contract price plus 7% for your closing costs.
Yeah, and
we wonder what happened.
Yeah, and that's exactly right. And so that's why the wheels came off the bus there. And today, on the complete opposite, we have a massive inventory shortage. How about you guys on the East Coast?
We're low on inventory. Florida and Tennessee are the worst as far as inventory problems.
Well, that's because everyone's from California is moving.
Correct.
That's exactly what's taking place.
I saw something on the other day. Somebody had posted on the internet that Gavin Newsom was the #1 U-Haul salesperson for the year.
It's true. Largest one-way rental.
We do have a lot of people moving. Not just from California, but we do have a lot of people moving from California to Florida.
Yeah, and we see it too in Tennessee. Of course, all states.
Yeah.
And by the way, that's one of the interesting things that took place as a result of COVID, in the sense that, it used to be if you were going to work in the Silicon Valley, you were going to have to live in the Silicon Valley, right? Because you went into work every day. During COVID, that changed, and it changed the landscape for us, as far as I'm concerned, forever. So now, I have some good friends of mine. He's a taxidermist, self-employed taxidermist, and his wife is in marketing. They moved from here to Kentucky. And I thought, what in the world are you going to do for work in Kentucky? Here's the thing. The exact same thing. She's working from home.
Working remotely
from home. And I think that's really changed the scale. In fact, do you have an office?
I do.
You do? Okay.
I do have a physical office in Florida, but I tell people all the time, there are times when I have thought about closing that office because it's unnecessary overhead. Yeah. Because everything's done virtually anymore.
Right.
And COVID did change a lot of things. My office was hustling and bustling pre-COVID. Now, loan officers work from home.
Sure.
Nobody wants to come to the office anymore. And it's just unnecessary, really.
Right. It's interesting, and I think it's a good news, bad news scenario. Yeah. In other words, I think you and I would both agree that one of the benefits you get out of an office may not be the ability to do more loans, but the benefit of culture.
Yes.
Right? And the banter and the learning and the exchanging ideas. And that has become, I think, a lot harder to try and do virtually.
No, and I'm kind of old school in the fact that if I'm in my office, I'm more productive than I am at home.
Yeah.
Because, if I'm working from my home office, I'm looking out at the water. I'm like, okay, well, that kayak looks pretty good. I'm kind of stressed out. I might want to go take a paddle on the kayak, Right. I mean, it's just too many side distractions. And in all seriousness, it is tough for some people. I'm not saying for everybody. Right. There's some people that can do that work from home thing and do it extremely well.
Yeah.
I am not one of those people.
I have really had to change things up. In fact, a lot of folks don't know this, but I actually started a new job. Once again, everyone knows that my time at Finance of America in a national role, I jokingly say the wheels came off the bus there. They're no longer in the forward mortgage space. And so I went back to Stanford Mortgage as a sales manager there and loved it, by the way. No intention of leaving whatsoever. and an old teammate of mine from Finance of America is at Figure, Figure Lending, Figure Wholesale, Figure.com, however you want to say it. And it's a fintech company, literally, that is launching into our space with automation and technology for home equity lines of credit. And interestingly enough, you've used them.
They're very good at what they do. I'm excited to see what you bring to the table. Like you said, any new company that comes on board is going to have some growing pains. But I've actually referred 3 or 4 of my real estate agent referral partners, and they've done loans through Figure. And I just had one do one last month, closed in 5 days. He had his money.
5 days.
Said it was the easiest thing he's ever done.
5 days. And now I don't have to go on a rant about Figure here by any stretch, but I am pretty happy to have taken on this role and see where that takes us, and go from there.
Yeah,
so,
and I've actually got my company hooking up with you guys.
That's right. Yeah,
they're interested.
No, we're going to get that. So, speaking of your company, you have recently made a move again.
I did.
And where are you now?
So, I'm with Quillo. I do business in California. I'm licensed in 7 states. East Coast, Stockton Mortgage is the name of the company. California has a Stockton Mortgage in Stockton, California. So it was a forced brand identity, and so we used the company name Quillo here in California. It's our consumer direct division, and so to do business in California, I just used the Quillo brand. And
retail operation, right? Retail
correct.
Banking operation.
Retail banking.
Yep. So, I mean, you're pretty much used to that world. I mean, you have all the products you need.
We have conventional FHA, VA, USDA. We do all the down payment assistance, bond programs, have a great one-time closed construction loan. And the cool thing about Quillo and Stockton is the fact that they do everything in-house. And they service their own loans. They have over a $5 billion servicing portfolio.
Wow.
It's a small company.
Yeah.
It's pretty impressive.
That is really impressive.
I did a lot of research before I made this move.
Yeah.
Because, as you know, there's several mortgage companies that have struggled over the last couple of years, including the one I was at last. I'm not going to mention any names because I still have good friends and management there that I hold those friendships near and dear. But there's a lot of companies struggling.
Well, and I think with everything that's gone on, and there's a lot to it, it's not just about rate, of course, but I'm a little concerned that I think at some point a lot of them aren't going to make it. I actually think we haven't seen the complete fallout of that. And it's important, as I make that comment, I guess, to say it this way. Over the last, 5 to 8 years, maybe right in that realm, a lot of the banking, lending in general, became very big and very top-heavy. Tons of loan volume, especially over the last, during all that COVID time. I mean, unprecedented times when we saw rates go 3% and lower. Mm-hmm. And so companies became very top-heavy from an overhead perspective.
Yes, they did.
So much so that you almost can't reduce enough to make it, to right the ship, if you will. And that's my concern. My concern is at some point, in order to stop the bleeding, do they just stop entirely?
Correct.
I don't know. You made a point earlier that you don't have a crystal ball. I sure was hoping you did. I was hoping you'd bring a crystal ball out from.
If I was giving advice out of my crystal ball, people would be ill-advised to use that advice. They may not be in the business very long.
Yeah. So, but the lending industry continues to plug on. You're happy. Quillo on the West Coast, Stockton on the East Coast. Which is awesome. It sounds like you found a great home. You've got all the products you need. And by the way, we're getting you hooked up with Figure.
Yes. Yeah.
So you can
excited about that since I've used it before.
Yeah, so we can get that line of credit. So, challenges. If you're in your perfect world, if you could have a borrower start with you, what do you say to borrowers? How do you get started in the process? I want to go buy a home. What's that look like?
First step is getting the application in. Applications are easier than they've ever been. Our technology, at least with our company, and Figure's technology is great too. Yeah. I've used it. But our technology from the online application, the web application, is so slick. 10 to 15 minutes to complete the application. It creates a secure portal. The borrower can upload financial documents, pay stubs, bank statements, driver's license, all that stuff can be uploaded right into the application. No more emailing all your stuff over and then somebody having to move it all over to the file. Then once that's in, it gives me what I call the 30,000-foot view of the whole picture.
Sure.
So that we can see what the debt-to-income ratio is, what's the credit score, what's going to be the best program based on those parameters, what's the best program to put this person in, and then you start with loan scenarios. Right. Different amounts down, what's your comfort zone on payment, and that type of thing. And it lets you dial them in more into something they're comfortable with versus getting somebody outside their comfort zone immediately from the application.
Well, and knowing early on, because that process you just walked through, and this is really key, I think, is long before they've actually gone out and started shopping for homes.
Oh, that's a must.
Because it's a game changer.
It is.
If they do it the opposite way, which, by the way, for whatever reason in our industry, the norm has been start looking at homes, you're out with a realtor, you find a home you love, you fall in love with it, you put an offer, and then you reach out and call Ken.
Yeah.
and then you have to pick up the pieces and try and get it fixed. And strategies might become limited. I'll just share with you an example. I had a client some time back that's how they did it. And they're very, very well qualified. I've done loans for them in the past. So they just didn't think anything of it. They went out and said, found a house, going to put an offer on it. And, of course, this was at a time where they were having to bid above the asking price, which, okay, fine, we can make sense of that. And then they came in to try and figure out the best strategy for the loan. Well, interestingly enough, had I been able to meet with them prior to putting an offer on a property, what I would have showed them as one strategy would have been to say, yeah, you can offer more than what they're asking, but ask for a seller credit to buy the rate down.
Absolutely.
Right? And
we're doing that all the time now.
All the time. It's very, very common. And I've been preaching that for years. And now, of course, the 1-1-2-1 and 3-2-1 buy downs are all temporary buy downs are all back, and that has to be seller funded. Is that the case with you guys too?
It is. We will not do a 3-2-1 buy down. We'll do a 2-1 buy down. That's the maximum we'll do.
Well, honestly, the 3-2-1 is just so expensive.
Expensive.
You know, that interest offset for that 3 years.
It's cost prohibitive.
Yeah. So it's interesting though, because I can make sense of a seller credit to apply towards a permanent rate buy down all day long. It's a little harder to make sense of it if it's my client's cash.
Correct.
You know what I mean?
Absolutely.
But if you don't go into the offer with that strategy, there's no backing that. You're not going to redo that contract.
No.
You know
what people don't understand about the 2-1 buy down too is that goes into an escrow account. So let's say the rate's 7.25 today, and you buy the rate down to 5.25. The rate's not 5.25.
No, it's
7.25.
That's right.
That's the fully amortized rate. They're just taking money out of that escrow account from the buy down funds to make up the difference between the 5.25 principal and interest and the 7.25.
That's right.
Let's say next year, there's some talk that rates may come down first quarter of next year. They've already came down over the last 3 weeks a little bit. Rates come down, you refinance. The money that's in that buy-down account is the borrower's money. They can use that as a principal reduction. They can use it to cover some of the cost of their closing cost on the refinance. It's a win-win.
No, it's a great strategy. I'm definitely a big fan. It's really interesting. You and I are big fans of Mortgage Coach.
Absolutely.
You still using Mortgage?
Use it on every transaction.
Yeah. In fact, there's a sticker on your microphone right there. It says Mortgage Coach right there. I planned that on purpose. One of the things that I love to illustrate that is in Mortgage Coach is those buy down options.
Yes.
Right. Either permanent or temporary, either way, and walk through those strategies. And what's kind of a fun exercise, I don't know if you've ever done this or not, but if I'm doing a consultation with a client and I'm finding out what is it they're looking to accomplish, to your point, what's their comfort zone in payment? What do they have for cash in the bank for down payment and otherwise? I'm getting that 30,000 foot level you're talking about, that you're working through the application. Well, if I just play this out and I say, okay, they qualify, they think they want to buy a $500,000 mortgage, and I say, okay, great, Mr. Smith, you found your $500,000 house. Now let me ask you, how much are you going to offer on it? Well, 90% of homebuyers, because they watch their news, they're going to say, well, I'm not paying full price. I think the real estate market's going to crash. There's no way. I'm going to offer them $480. Okay. And maybe that's a good strategy. But what I love to use my Mortgage Coach for is I'll say, let's play this out. I'm going to show it to you at 500. Here's your rate at 7.25. I'm going to show it to you at 480, but guess what? Your interest rate's still 7.25. Or I'm going to show it to you at 500 with a $10,000 credit from the seller, right? So, but now your interest rate's 6% because we've taken that credit and we've applied it towards a buy down. Now, the $20,000 less sales price saves them $135 a month. The full price with the seller credit buying the rate down saves them $350 a month.
It's a no-brainer.
It's a no-brainer. Now, no fault of the home buyers and the clients out there because they just don't know. It's not their fault. They just don't know. But the value is in the rate, right, and the strategy to help apply to buy that rate down, not in price. Dropping the price actually doesn't shave that much money off the payment.
No, it doesn't do you any good. And one of the conversations I've had with several borrowers a week. I'm going to wait till the prices come down. I said, so we all know what happened a year and a half, 2 years ago when rates were still low, inventory was low. Every house that hit the market, we had houses in Florida where people were offering cash, $100,000 over asking price. I had borrowers getting so frustrated, putting in multiple offers, losing every one of them. Then they just got out of the market. Now those same borrowers have an opportunity to come in, be competitive with an offer. And I tell them every week, you wait till rates come down. You keep telling me you're going to wait till rates come down next year. Guess what's going to happen?
Oh, the demand.
All these buyers are going to be back in the market again, and you're going to be right back in the same mess you were in 2 years ago.
I agree 100%.
And it's an education process, and sometimes it works, sometimes it doesn't.
Yeah, I agree 100%, Ken. It's such a valid point to make. And you're right, the client, the home buyer, and again, it's not their fault.
No.
They don't really know, and in their mind, it makes sense. Well, I'm going to wait for rates to come down. Well, we already have a low inventory issue. I don't know about you guys on the East Coast.
We do.
But, everywhere, to the best of my knowledge, is an inventory
Yes.
issue. In fact, I don't know if you noticed it because you're on a quasi-working vacation. I don't even know what we call what you're doing right now. And here I am making you talk about business. But just this morning, both FHFA and Case-Shiller came out with the housing price index, and home prices rose again.
Yes.
Average home prices rose again.
6 to 7%?
Yes.
In some areas.
Yes. And so it's like, okay, can you imagine, what if, all of a sudden tomorrow morning we wake up and interest rates are 4%? Oh my gosh, the demand is going to go through the roof, and basic economics here, supply and demand, and that will shoot prices up even further.
You'll see a 10% increase.
Yeah. And not to mention, to your point, you're going to have, instead of having 5 buyers trying to put offers on a property, you're going to have 40.
Yes.
And by the way, you mentioned you had clients putting in offers $100,000 over. When I was doing my national role with Finance of America, we had one of our offices in Southern California that one of their clients, in order to get the deal won, bid $700,000 over the asking price.
That's called having more money than
Man,
you got.
I got to tell you what, that's scratching a check right there.
You better like that house a lot because you're going to be in it for a while.
You're going to be in there a while. Yeah.
It's crazy some of the stuff you see, and it's it's a crazy time.
Yeah. So I don't know about you. I know that I've helped train and coach a lot of originators on Mortgage Coach. Heck, I've even helped you with it from time to time.
Absolutely.
And I will tell you, even though my primary role is not that of an originator all day long, but that's where I start with my clients. I actually start with Mortgage Coach even prior to an application. Now, I know that sounds crazy, but it's a presentation tool. It's not a disclosure. It's a conversation starter, and it's a way to quickly dive in and help decide what the borrower's looking to get accomplished, right?
Well, the borrower can see on one screen up to 4 loan scenarios, and they can click tabs and look at the whole picture versus looking at 8 pages of paper good faith estimates that make no sense and totally confuse them. Of course. I mean, Mortgage Coach has been a game changer for me.
Oh, yeah, and one of the things I love to tell originators about that is, yes, you haven't run credit, but you've asked the client about your credit. And by the way, most of them know.
Yeah.
You can tell if a bar, they'll say something like, oh, I just bought a car last year. My credit was 800. Okay, great. I'll just make a note. Excellent. Right.
Yeah.
But I always preface it based on what you've told me. Here's, I think, a couple strategies for us to look at. The next step is to go in and complete the application. Now, here's what I found, which I think is completely amazing. When I've done that with clients, they haven't received the mortgage coach report and gone, I think I'm going to check and see if I can get a better rate somewhere. It never enters their mind.
Almost eliminates that.
It almost eliminates the shopping perspective of it, and you're directing them, okay, now you're going to file the application, and now we're probably going to redo those scenarios many different times, right? Specific to properties and whatever else the case might be. But, yeah, I didn't mean to get off on a tangent.
No, well, you know as well as I do that the thing that's frustrating in this industry right now, and it's going to change because there's originators right now getting out of the business right and left, and some of them, frankly, needed to get out.
Sure.
But the thing that is most irritating as an originator doing this for 23 years is to give a client a rate that's a valid rate.
Right.
And if it's anything, I've quoted a little bit on the high side in case rates change tomorrow. And then they go and they shop somewhere and they tell the other originator what you quoted them.
Right.
And all of a sudden you're quoting 7.25, and this brokers are better, dude.
Right. Yeah.
Is quoting them 5.99.
But it's not an apples to apples comparison.
Then they call me back, and I'm like, if you can get a good faith estimate from them or a loan estimate showing that 5.99 and how many points they're charging you for that rate, then we'll talk. And it is never what they tell them it's going to be.
Of course not. Ken, let me ask you a question. Do you have you worked your way into the industry now to where you're the one deciding what mortgage rates are in a day?
I wished.
Yeah, right. And neither are any of the banks online, neither are any of the big banks, neither are any of the broker shops. We don't decide what rates are. Those are set at levels well above mine and your pay grade.
And you know as well as I do that, 9-10 years ago, they changed the loan officer compensation rules.
Oh, yeah.
We get paid on the loan amount.
That's right.
Not on the rate.
That's right.
Rate has nothing to do with it.
Yeah, we get paid the same. Whether
If I go charge somebody
or 10%,
if I go charge somebody a higher rate and there's yield spread overage, it gets credited back to the borrower. When I made this move to Stockton/Quillo, a couple of broker shops that recruited me. And they're quoting 275 basis points, and they're doing this and doing that. But the ex-law enforcement in me comes out. And so I ask the hard questions. How many loans do you actually make that on?
Right.
Very few. It's a smoke and mirrors.
Sure.
And frankly, I would rather do business with a company that's doing their underwriting and processing in-house.
Right.
And servicing their own loans.
Yeah. When
my clients get a copy of their mortgage statement, and I apologize to my clients in advance for this, has my picture on it. And it has our company's information on it as well. So you know that loan is getting serviced by people that actually care about you and care about what your rate is, and they're going to be constantly monitoring that rate to make sure that you're in the best rate possible.
That's awesome. So where you're at now, your picture is on the mortgage statement.
Unfortunately, for some people, yes, it is.
Yeah, I mean, I've got a dartboard over there.
Set up our airsoft guns, have some target practice.
Right. Yeah, no, but that's pretty phenomenal. In fact, it's interesting because I think there's a time and a place for the broker shop world. I think the single man, 1 or 2 man shops, no overhead working from their home, no processors, they're doing everything themselves, they're closing a certain amount of deals. I think that works. Where it gets a little rough is when you're trying to go from a retail banking operation and take, let's say, 25 loan officers and move your whole operation to broker. There are some real challenges there.
Well, I think you and I have always had the same mentality. You know, we're all in the same business. I have 2 of my good friends in Florida are brokers.
Yeah.
I go to lunch with them.
Sure.
They're my competition. Do I talk trash to them? Absolutely, because that's just in my DNA, but we have fun with it. But I think where a lot of originators in today's world, especially with the different generations, is they want to get on and bash retail banks. Yeah. Retail banks want to get on and bash brokers. Listen, there's good people on both sides of the aisle.
Oh, sure.
And we all do the same thing.
We do. We all do the same thing, and it comes down to a different level of support and, marketing and all those different things. To your point, mortgage statements with the loan officer's picture on it, that's pretty impressive. You're not going to get that in the broker world, right? And maybe that's important to some, maybe it's not to others. That's okay. I will tell you, I actually have seen an interesting trend right now, Ken, and that is, I think so many of us in this industry, broker, retail, banks, I'm starting to see a ton of unity. I see a lot less bashing anymore.
Yeah,
you know what I mean? I'm really noticing that. And by the way, I think that's good for the industry.
It is.
I mean, we're all in this, we're playing the same sandbox, right?
And we need to learn to play nice together.
We do need to learn to play nice. You're exactly right. So anyway, fun stuff in the lending industry. What are you doing right now for marketing and that type of thing? Where are you going to attract new business?
We have, and like I said, I've been with, a few companies, and that's one of the things that impressed me about Stockton and Quillo is the fact their marketing department's second to none. They do some of the coolest crap. I mean, very supportive. If you've got an event coming up, they're all over it. They've got some very creative young people. I'm outside that creative young people stage in my life. Yeah. I'm not very creative. And, but these guys kind of take the work out of that. But, one of the things I decided to do, I was coming out to California about once every other month, spending a couple of weeks out here. We still have family here. My wife has family up in Paradise, which is everybody probably knows was a little town that burnt to the ground 5 years ago. My wife's family lost their homes, and so it's kind of nice to get back out here. We came out for Thanksgiving. My daughter lives in South Lake Tahoe, and I was out here about every other month for a week or two at a time. And I love getting out and meeting with agents and referral partners, talking business, building game plans, and doing that type of thing. That's kind of my niche. It's what I enjoy doing. Yeah. Some people say it's old school, but I am old school. Yeah. I'm not a guy that's going to be out here advertising in magazines or on the radio or any of that stuff. So I'm going to get back more to the basics. That's my goal for 2024. Get back to the basics, start coming visiting. I'm licensed in 7 states.
I got to tell you, get back to the basics. That is probably the best approach I can imagine. Now, I'm gonna challenge you here a little bit, and you and I joke around about this over the years, but we do need to get back to the basics. We do, because everything you just laid out equals relationships. Yes. And you're a relationship guy. You're doing business with people you've built relationships with. That's just the net of it, right? That's getting back to basics and whatever it is you do to help foster new relationships. Now, what I will say is jump into, pick up the pace regarding adoption of things like video. I know you do some stuff on social media. And yes. Of course, I've been using video in our industry well ahead of everyone else. And so, sure, some people say, man, you make that look so easy. Well, it's not so, the first one you do is going to be terrible, right? But I started using videos for status file status updates. I started having some fun with some of the realtor partners that I have that I'm really close, have great relationships with. I'd send them funny little videos on their birthdays, and and that has helped. And here's how I like to say it. So you go out and you spend some time with a realtor, or maybe a group of realtors, and maybe you do a lunch and learn. And those are great, by the way. Those are back in full steam, but I don't know if you guys are doing them or not, but
yeah, we are.
We're seeing great success on that. Different topics of appraisals or whatever the case might be, right? So you had 10 realtors in that room. Okay, cool. I have gotten to the point where I was doing some of those lunch and learns, and I would just, while one of my other loan officers was up in the front of the room speaking, I would grab my phone and I would just take some short little videos, and I would create a quick Reels video on Instagram, right? And I'd add some music to it. You couldn't really hear much talking, right? That wasn't the point. And just show what I was doing. Yep. Right? Just a quick 45 to 60 second. Here's what's amazing. That video, so I had 10 people in the room, and one of those videos gets 400 views. 400 people saw what it was I was up to. And I would challenge anyone in our industry, or any other industry for that matter, how long would it take for you to put yourself in front of 400 people?
A long time.
A long time. So I love the old school mentality. I love the relationship mentality. I think you just have to we have to add to it some of this other thing. I think it's interesting. I want to say the statistic is just over 50% of all home buyers in the country right now are millennials.
Yeah.
Well, I got news for you. This is where they work and live and breathe, and everything is right here on their handheld device, and they're scrolling through Instagram and TikTok and chit chat, whatever. I don't know.
Snapchat.
By the way, I hate that app. My kids send me a Snapchat. Little side note here. Do you have Snapchat?
I do.
You do? Yeah.
I don't use it that often.
I don't use it that often either. But what drives me nuts is whoever the evil SOB was that created this. So my kids will send me a photo of my granddaughter in Texas, right? Well, you get to look at it once, and then it goes away. It's gone.
Here's a tip.
Okay.
Click on that picture.
Yeah.
And hit save and chat.
So I can save.
Yes. Just learned that the other day.
See, a couple old dogs like us.
That's
we
right.
can learn new tricks.
Yeah.
Yeah, it drives me nuts. But nonetheless, the point is one of the reasons I love the use of video so much is it's a format that can be shared. When I say to loan officers all the time, you can send an email to your realtor that says, hey, congratulations, we just received the loan approval with conditions. I'll keep you posted. We'll reach out if there's anything we need help with. That's cool. That's a great email. But do we think that the agent that received that email printed it and ran around the office going, look what I just got from my lender?
Or forward it to anybody.
Right. Yeah.
Yeah.
Probably not.
No.
Right? Now, if it's a video, they absolutely will. See, it's a format that can be shared. Look what I got from my lender.
Yeah.
Or a client sends it to grandma and grandpa. Look what Ken sent me. You know, that's why I love the power of video, because it's a format that quickly allows you to reach more of an audience.
Oh, I agree. That's why I took pictures of all your camera and audio equipment when I got in here. You know, and you and I are both big Harley guys.
Yeah.
And
well, you just for everyone listening, just to be clear on that, he says he's a big Harley guy, but he has a Street Glide.
It's not a road glide.
I'm just giving you.
But I look good on it.
You do look good. It's the same. By the way, mine's a road glide. Ken's is a Street Glide. Outside of the fairing, it's the same damn
bike.
motorcycle.
Yeah.
Yeah.
But we both. I'll shoot reels, and that's what I've got to get out of my comfort zone. I'll shoot reels with my Harley at Bike Week, and I'll post them in hundreds of views.
Sure.
But I won't sit down and do a mortgage reel.
Right.
You know, and I've got to get better at that.
You know, I'll share something with you, and this again was a couple years ago in my role at Finance America. Of course, I'm communicating with the entire sales team nationally, and the name of the game at the time was adoption. Well, it's the same today. Adoption of new things, whether it's tech or work processes and flows, CRMs, things like Mortgage Coach. Did that camera turn on? No, that was my chair. Sorry. Anyway, so I got a little creative one day, and I hooked some GoPros up onto my bike. I had one camera down on my engine guard facing back at my boot by the shifter. I had another one facing me, and then I had a 360 camera filming everything around me. And what I did was a video about the importance of needing to make a shift in this industry. And I went out and rode my bike, and I have a microphone, in my helmet, directly plumbed into one of my GoPros. So the audio is crystal clear, right? And I did a video demonstrating on what happens if you don't make a shift. And I'm revving my bike up. And I'm like, listen, if I don't shift, I'm going to blow up. So let's start shifting. And second gear was Bomb. Third gear was Mortgage Coach. Fourth gear was our CRM. You know what I mean?
Yeah.
And it was just a great way to illustrate the importance of making a shift.
Yeah.
You know?
That's
so
great.
I have fun with that. And so you say you do videos on your bike. Well, great. Find ways to incorporate who you are on your bike and along with how you do business.
Just need to find a way to get a microphone because we don't have a helmet law.
I noticed that. I see your different videos and stuff, which are awesome, by the way. And you've got no helmet on. And by the way, when I rode to Sturgis back in 2019, a lot of the states out there, including South Dakota, doesn't have a helmet law. And we did. We rode all around with helmets. It is, man, it's liberating.
It is. But my wife tells me what an idiot.
Oh, mine too. Mine too. And in fact, she would see pictures. I'd send her pictures, or someone would post a video of us on Sturgis, and she wouldn't say, "Wow, it looks like you're having fun." She's like, "Where's your helmet?" But that's great. And so I've been to Sturgis. You haven't, but you've done Daytona Bike Week every year.
Daytona, just did Tennessee, the inaugural Bike Week up there in September.
Yeah.
And, it's a good time.
Yeah, now I know this has nothing to do with loans, but we're a couple bikers, so we got to talk about this. So, being's in Tennessee, have you ridden that?
The Dragon.
Yes.
Yes, twice.
How awesome is that?
Oh, it is absolutely
I've
amazing.
seen videos and pictures.
It is life-changing. I'll put it that way. It is so awesome.
Yeah. Man, I want to do
And they've got vendors that set up all along the tail of the Dragon. They take pictures, and then you can go back and look on their websites and pull up the time frames. It's awesome.
Yeah. Okay, so your outlook for 2024, you feeling good about it?
Feel good, man.
Yeah.
Feel good. I've always just tried to keep a positive attitude in this business. Doesn't matter during a down market. I'll still be closing a couple of million a month. And, you just got to keep your mind right.
Oh, my gosh, you're preaching to the choir here, Ken. I love that.
Yeah, you just got to keep your mind right.
I've said this before. People tired of me hearing about me saying this, I guess. But, it's interesting you say in a down market. And, yes, it is the market, right?
Yes.
I like to say this is the market. It's not a good market. It's not a bad market.
Yep.
Just get your mind right. It is the market. So now we just need to figure out how to work within the market.
Well,
right?
I tell everybody it is the market, and you need to find the solution to be successful in that market.
It's so true. And what I find kind of interesting is back in 2020, 2021, when interest rates were 3% and loans were falling out of the sky. I don't know about you, but I don't remember a bunch of loan officers running around talking about what an easy market it was.
No.
Now, they're all real quick to talk about a hard market.
In a heartbeat.
And so I always like to try and reel them in. To your point, it's the market, right? Mm-hmm. So now figure out how to work within it.
Yeah.
And
you just got to work with the hand you're dealt.
Yeah.
And, I kind of liken it to some of the calls I was on in law enforcement. As you know, I lost 4 friends to officer-involved shootings in Butte County and one of my friends in Sacramento at Sacramento PD in a 3-year period. It was hard.
Yeah.
Still have PTSD over it today.
Sure.
But you went on calls sometimes that you didn't know whether you were going to go home. But you worked with the hand you were dealt.
Yeah.
Sometimes you had no backup, and you just had to find solutions to that. So sometimes finding a solution in the mortgage business is not that hard for me because I've been through a lot harder stuff.
Well, number one, Ken, that was fantastic how you said that. Yeah. And you're exactly right. That is the right mindset. And your previous history in law enforcement has definitely clearly prepared you for lots of different conditions. Yeah. And what's amazing to me about that is talk about keeping the right mindset. When things go sideways on a loan, and inevitably they will from time to time, right? Or an agent is upset or a client is upset. Those things happen. Mm-hmm. Different from when you were in law enforcement, most likely no one's going to die.
Yeah.
When you were in law enforcement, faced with some of those challenges, whether it was no backup or being outmanned or whatever the case is, the outcome or the potential result is the risk level is way higher than what you do today.
Yeah. You may not go home to your family.
Yeah. I mean, that is.
And that's why I really, it sucks sometimes when loans go sideways. And, fortunately for us, we try to put a good quality product in the system. I don't throw loans up against the wall and hope they stick. So most of ours go through unless there's an appraisal or inspection issue. But if a loan goes sideways, it's just that. You just go get another one.
Yeah. No, it's extremely powerful.
Yeah.
Well, listen, we don't need to keep carrying on. Ken, I can't even tell you how awesome this is, man,
brother,
to have you in the studio.
It's been awesome.
It's good stuff.
I
and by the way, the sign right over your right shoulder says, "Legends never die," brother. That's what I'm talking about.
They just get older.
I know. And to tell you the truth, I was a little concerned I'd be able to get you up in that chair.
Yeah, man.
Well, Ken,
I appreciate you having me, brother.
Thank you very much, man. And that's it. We'll see you on the next episode of T Rowe.